Good day, fellow investors. Hershey has been one of the most requested stocks for me to analyze over the past few months, and let's explain what's going on here. The first thing you have to focus here is not just the 45% decline recently, but also the long-term trend of the stock. So this jump for such a company that happened here is a sign of exuberance. So if we look at the long-term trend there, then we might still be above the long-term trend, which is the first sign that you have to also watch. It's not just what happened in the last year, it is the long-term story. Now, there is also talks about the Mondelez making a takeover there. Of course, then they have to pay higher, but for now there is not a material or anyone coming out with it. That means they cannot deal on the price. On the Hershey Charitable Trust also cannot know what to do with the money, for example. If you look at their presentation, so they have been doing really well over the last 10 years, 10% growth, earnings, cash flows, nothing wrong, expanded their offerings, chocolate, many different brands there. Everything looks good, 4% chocolate segment growth per year. They plan to keep on growing on those high growth markets, especially emerging markets. Nothing wrong there. Long-term outlook, net sales to grow, and adjusted earnings per share growth not more 10%. They have lowered it. Their target is 6% growth, but still 6% growth is something. We look at the cash flows. This is approximately 2 billion something per year of cash flows, used M&A, sharp buybacks, debt reductions, dividends. But if I look at net income, last year it was just shy of 2 billion. But now we come to the shock. And the shock is first that revenues haven't grown over the last quarter. They have lowered their guidance to down mid-single digits. Down is not 6% growth, and if you go down, let's say 5%, you need a lot of work to catch up to the 6% growth. That's the problem. And here I want to show you a tool for explaining what happens with these growth stocks. The delta of the delta tool for growth stocks. When you have growth of 11% per year, for example, everyone looks, oh, this is growing great, everything great, which leads to P ratio expansion from 20 to 40, and the stock is consequently up. However, as soon as there is a change in trend, the P ratio contracts from 40 to 20, and the stock is down, because we have a double contraction, a double whammy. EPS is down, and then the P ratio goes from 40 to 20 on lower earnings per share. Earnings per share are now not 7, but let's say 6. And then you have here the double whammy, and that's why it's the delta of the delta tool that always explains these things. And perhaps the biggest shock was Q2, when sales decreased 16% and adjusted earnings per share decreased 36%, which was insane. But okay, the company still looks to have its stability, found back its stability. Earnings per share, not 9 anymore, but likely going down to 8, something like that. Long-term debt, a little declining, okay. And they are using their free cash flow, 1 billion for dividends, $500 million for buybacks, so that's 1.5 billion. That is what they can deliver as a business. Now, the key thing is here, maybe this is just normalization, because if I look at the operating margins, we are still now higher than the normal situation. There was this boom, global expansion, growth, this and that, and pandemic, home, and buying more of that. And now maybe we are just looking for a 2-year return to normality for margins, higher competition with these businesses, which then would lead to maybe 5 earnings per share, P ratio of 15, and that's 75 stock price. So that is still a potential for 50% down here. Hard to predict what will happen. I'm just showing what can happen, the risks and reward, and 3.6% yield is not enough for taking the risks that have been disclosed now from just looking at the history of the business. This is the situation with Hershey. P ratio of 22 is just too high. Call me when it gets to 15 on perhaps even lower earnings and a dividend yield of 4 or 5%. For now, this was too much exuberance. There is still room to get back to trend. Thanks for watching. I'll see you in the next video.